Good. So I'm going to talk about the tax implications of electric cars. I'd just like to say before I start that there is a climate crisis. It is serious. Things have to change, or there's a threat to humanity. I can't say how serious it is. I'm talking as an academic. I'm researching in this area. My field of expertise is accounting education, and I'm looking at how we have to change business school education to educate future generations, because at the moment education is just not including enough about social and environmental justice, and we've got to be changing as a society to start making that sea change. At the heart of this, I'm actually an economist as well as an accountant. I spent 3 years, 10 years ago, doing an MSc in economics, and I did some environmental economics as part of that. And I'm a strong believer that for us to change as a society, there needs to be economic incentives, and it's up to our governments to make it so that there's a level playing field, actually. So that carbon, with reduced carbon usage becomes the norm, because it's economically, it's economic incentives to make it the norm. Okay, so I'm actually going to talk about the tax implications, though, because fortunately with company cars especially, the government has made it so attractive to do this if you're a company owner, that it's becoming a bit of a non-brainer. So I'm just going to go through this now. Okay, so I have a friend. They're leasing this Nissan, and by leasing this Nissan, they immediately put £30,000 into the client's bank account. The cost to the client's company is £233 a month. The cost to the client personally, in their personal affairs, is zero. Okay, so they're £30,000 better off in their bank account. Their company is having to pay £233 a month, and the cost to the client is zero. Okay, and that zero can even be that they haven't any cost of running, because there could be no cost of petrol, but I'll cover that in a minute. Okay. So how did the client get £30,000 in the bank from making this transaction? So they previously owned another vehicle. That vehicle had cost the client £45,000, which they had to earn £56,000 if they were a basic rate taxpayer to be able to get that 45 into their bank account. E.g. they had to earn a gross amount, pay tax on it, and probably national insurance. So the figure's probably higher than that. And if they were a higher rate taxpayer, it would be even higher than that to get the £45,000 available so they could buy that vehicle. Anyway, she sold the vehicle after 4 years of usage, because she was getting this lease on the Nissan. And since getting the Nissan, she's had it in an ISA tax efficiently. She's mixed the ISAs, used to her and her husband's, and she's actually made some gains with some sensible investments there. So she's actually turned the 30 into 35, so the money's working as opposed to being in a gas guzzling vehicle. Cost to the company, £233. Cost to the client, zero. So how does that work? Okay, so the lease is £230 a month, 3 years. At the end of the lease, she returns the vehicle, mileage up to 12,000. Companies can get 50% of that back, so that brings the cost down to 233. And then there's corporation tax. So the 288 can be offset against corporation tax, which is another £55 saving in tax. So the net cost is £233 a month, or just over 2,796 a year. Okay. And I'm not even mentioned the petrol savings. Okay, it's cost to the client. Now this is where the benefits in kind come in. So the benefit in kind is £35,000. Okay, so the vehicle, for benefits in kind, you look at the vehicle and you look at the list price of the vehicle. And then you make a calculation which is based on a scale rate for that vehicle. Now, the scale rate in 2020-21 is 0, right? So the calculation to work out the benefit in kind is £35,000 times 0, which is 0. Okay, so the client has solar panels on her roof. Okay, and so it's not costing her anything in electricity except for the December months where she just hasn't got enough electricity to charge the car, so she might have to pay for a little bit of electric there. But she told me that she was able to find a lot of charges on her journeys that were free. Okay, the scale rates changed to 1% from April this year and then 2% next year. Okay, still very low though, and I'll just do a little bit of illustration on that now. Okay, so next year, so starting from the 6th of April 2021, the scale rate will be a 1%, and from next tax year 2022 it will be 2%. So what's the implications on her tax now? So at 1%, the benefit in kind will be £350, and she'll have to pay, as a basic rate taxpayer, £70. Okay, the company has to pay national insurance on that. The receiver of a benefit in kind doesn't pay national insurance. Okay, and so the company will have to pay £48.30 in national insurance. Now I've worked that out. The cost of that vehicle then in tax is 7 pizzas if the average price for pizza is £10. Okay, now that's important because there is a bit of a lifestyle change with driving an electric vehicle, in that if you are making long journeys, you have to stop for half an hour, a rapid charger, and might be time to have a pizza. So that could be an important factor. Okay, so looking at an Audi as an equivalent, and I reckon that Nissan would beat it off the lights, but that's another story. I reckon the Audi would cost 165 pizzas. But you wouldn't have time to eat them because you'd be racing around the country, filling it up with petrol or diesel. Okay, so the cost of an Audi, the list price of that Audi, I think, well, of course on the Audi website it says 23,875, but looking at scale rates, I think it's 26,600. That's considered to have a 132 gram output as petrol, and the BIC rate on that is 31%. So the cost implications of that is 31% of 26,600 is 8,246. And so if you're a basic rate taxpayer, that would be £1,649 a year in tax, which I reckon is 165 pizzas at £10 a piece. And if you're a higher rate taxpayer, that's 3,298 at 40%. And the company would have to pay national insurance of their 1,138. So you can see massive change. We talked about the difference between 7 pizzas and 165 pizzas, or £7, £70, or 1,600 or 3,300, depending on your what rate of tax you are suffering. Okay, so is it worth it? Well, from a financial perspective, yes. There's a little bit of a lifestyle change here, but that, because if you've got to do 400 miles a day, there's a bit of a challenge there. But who has to do 400 miles a day in their car? And I believe that you have to start changing your lifestyle a little bit, get a charger at home, be charging at home, and we've got chargers at work as well. We're in the enterprise centre and there's charging facilities there. So if it suits your situation, it's a no-brainer. There's massive tax benefits, and that's what we need, because if we've got to change over to this new infrastructure, we've got to be doing things as a society to change, and we've got to push governments to do this sort of thing, to make sure that carbon is taxed properly and the incentives are given for those people that are moving to a low carbon future. So if you want to discuss this further, I give a free consultation on anything tax and business matters. And Peter Ellington at Triple Bottom Line Accounting. Thanks, Andrew, for the opportunity.